Take a look at shares of Affirm. You can see up over 16%. This after strong results and guidance. Gross merchandise volume rose 43%. It's now $10.4 billion. Active card users nearly doubled, and the shares are having a very strong year, up 130%. As you can see, that's just over the last year. Joining us now in a first-time CNBC interview is Affirm's founder and its CEO, Max Levchin. Max, a very strong quarter. Obviously, just talked about the response you're getting in the market. What was behind it? I have some who perhaps are being a bit cynical, saying, well, did they lower their lending standards?
Absolutely not. You can readily see it in our delinquency numbers, which we publish more frequently than every quarter. They held up beautifully. We are printing very consistent credit results, and that is the cornerstone of our success. The reason we have been as strong and as resilient, and I think have earned the appreciation of our shareholders, and on that front, that we have always put credit quality first. Our growth is a function of the broad adoption of this products, our brand, our trust with consumers, but our credit standards remain very high and will continue to do so.
And for the gross merchandise volume up 43%. I mean, again, you talk about acceptance. What is behind it? Is there a new growth trajectory at this point that you're starting to look at?
Again, I think it's more than anything just the cross-pollination of our consumers and all the counters, all the virtual and real-world places where Affirm is accepted as a first-class payment tender. At this point, you can see it in our frequency as well. You can see that consumers are transacting more and more frequently. The consumer growth itself, the merchant growth, all these things compound to just drive usage more and more. The one thing that I'm sure you'll ask eventually, so I'll front run it, is which category drove growth. This particular quarter, we haven't seen one specific category really stand out because all of them did so well. And so that's maybe the core answer right there. It's just firing on all pistons. We are hitting real acceleration.
What's your average loan size at this point?
Still in the few $100s. So we started at a very high, sort of almost $1,000 average, and it's now trickled down into sort of a mid-low couple $100s, which also signals broad adoption. Obviously, you only buy $1,000 things once every couple of years for most people. A couple of dollars or a couple of dozen dollars and $100 is something that happens a few times a year and more. So the trend of AOV coming down towards, I think it's right now about $400, is actually a really good trend.
I'm looking at the results here. If 50% of your new users are entering via your 0% APR loans, how do you ensure that those are not the risky borrowers?
Well, we underwrite every single transaction every single time, no exception. So for the avoidance of doubt, first of all, these 0% deals are true zero. The consumer is not promised to zero that flips into some other thing. Some of our competitors love to do that. We do not, never have, never will. It's very important to us that the transparency and the trust that we have earned remains exactly there. These 0% deals are still underwritten every time. If we think the person cannot afford to borrow money, we will very sadly and compassionately tell them, hey, this isn't for you, it's not going to work out. But they are very compelling. They're a great way to learn that Affirm is really good. It's there for you. It's acceptable everywhere. And many times the merchant is willing to pay your interest for you. So these are 0% deals.
Are you worried at all about this pivot by the Trump administration on student loan payments resuming and how that affects your borrowers' ability to pay you?
In a sense that it changes the macroeconomic reality for us, sure, but in practice, no. We track every imaginable macroeconomic change all the time. Obviously, this is not new news, and we have adjusted our models and our credit standards appropriately for all the various things that happen out there, be it tariffs or student loans, et cetera, et cetera. So no, the fact that we underwrite every transaction really does give us the advantage to control for credit all the time.